Good day. This is Peter Knipp from Castlestone Management with comments on the U.S. markets for the week ending August the 7th. A rebound in the tech stocks supported by falling yields and an exhaustion of selling pressure helped the S&P 500 to its best weekly performance since April and a record close. All three major U.S. indices gained on the week. The S&P 500's information technology sector recorded its longest win streak since the 5-day stretch that ended 11 May. U.S. Treasury yields moved lower this week, pressured initially by fluctuating crude oil prices tied to Middle East developments and accelerated by a surprisingly weak July jobs report. Non-farm payrolls unexpectedly dropped by 23,000 jobs, driving the 10-year yield down to roughly 4.64%. Highly sensitive to the imminent monetary policy changes, the short end 2-year note fell by 5 basis points to settle at 4.19, while the 30-year yield finished the week at 5.19. A late week slump knocked the U.S. dollar index to a 2-month low after weaker than expected U.S. employment data reduced expectations that the Federal Reserve will need to raise interest rates in the near term. The dollar dipped by 0.4% in a week. Gold surged during the week, lifted by a weakening U.S. dollar, falling Treasury yields, and softer than expected jobs data. The yellow metal posted a weekly gain of 7%, its best weekly gain since January. Talks aimed at reopening the Strait of Hormuz pressured oil prices this week, although no settlement has been reached as of yet, and both sides seem to be demanding different concessions. West Texas Intermediate crude fell by 9% and Brent declined by 6.6% on the week. Thanks for listening and thanks for doing business with Castlestone. We'll talk to you soon.